hello, everybody, and welcome to my live, everybody. This is my live session where we talk about life insurance, that is. Now, over on Facebook, can y'all hear me over here on Facebook? Can y'all hear me? Let me know. Somebody, hey, Sister Jeanette, can y'all hear me? Can y'all hear me on Facebook? Thank everybody over on TikTok for joining me. Thank y'all for getting on. We're not going to be on long today. I'm going to just share with you briefly. Okay, good. Thank you, Jeanette. Thank you for replying to me, answering to me. So, 1 minute, y'all. I'm having some technical difficulties on TikTok. Okay. So thank y'all for coming on. We're gonna make this very brief today. And today our discussion is on paid up life insurance. Paid up life insurance. Is it really paid in full? When they tell you that it's paid in full, is it really paid in full? And do you have everything that you thought you had once it's paid in full? So we're going to touch on a few different points when it comes down to paid up life insurance. A lot of stuff that people really don't understand. I get this all the time when people tell me, oh, my insurance is paid up. And they think they have one thing, but then they have something totally different. And so when I sit down with them and explain their policy to them, then they understand that, okay, now they're coming up a little short. I'll put it like that. They're coming up a little short. But before I get started, I want to ask everybody, please, ma'am, please, sir, please share the live. Please share the live. You never know, the information that I'm sharing with you guys, somebody else might be able to use it if you can't. You know, maybe somebody else will be able to utilize it. So go ahead and please share the live as you get on. And I always like to give my credentials when I first get on and let everybody know I'm just not just an agent that just got their license yesterday. No, I've been doing this business now for about 15 years, going on 16 years. And this is not new to me, but it's true to me, okay? And my whole purpose of getting on here on Tuesday and Thursdays, my whole purpose of getting on here is to spill the tea. I call it spilling the tea. Things that an insurance agent that's trying to sell you a policy, they're not going to tell you. They're not going to tell you the stuff that I'm going to share with you about different policies and different tips and different information that the insurance agent is not going to share with you when they're trying to sell you a policy, okay? Now, if you have any questions, please put all of your questions in the comment section, and I'm going to try my best to get to each and every question before I get off. But like I said, we're not going to be on this live long today. So if you have a question, please post it ASAP. Please post it ASAP so I'll be able to answer it before we get off. Now, let's get right into it. We're talking about paid up life insurance. Paid up life insurance. And I know a lot of you probably heard this term before, this slogan before. Oh, my insurance paid up. I don't have that to worry about. My insurance paid up. When I hear that, I always, when I have a client that tells me that they have insurance that's already paid up, immediately, the red flag goes on. Because I know that a lot of these paid up policies, a lot of people think they have one thing, but then they have something totally different. So I'm going to break it down for you guys. And if any of you have a paid up policy, you'll know how to go back and look at your policy and make sure that you have what you thought you purchased when you took that policy out, okay? And if you don't have a paid up policy, maybe in the future, or maybe you know somebody with a paid up policy, and you can go to them and say, hey, look, check this part of your policy just to make sure you got what you think you have, okay? So with paid up policy, what is a paid up policy? So a paid up life insurance policy is more like it's referred to like a life insurance policy that no longer requires premium payment, but they still remains active and provide a death benefit. Let me say that one more time. A paid-up life insurance policy is a life insurance policy that no longer requires a premium payment, meaning that you no longer have to make payments on it. Excuse me, but it still remains as an active policy, and it provides a death benefit. Now, there are two main types of paid-up policy. You have your full, and y'all, I'm looking back and forth because I'm here on Facebook and I'm here on TikTok, okay? And I'm here on YouTube. So, when you have a fully paid up life insurance policy, a fully paid up policy, that means you paid all the required payments either over time or you paid it in a lump sum. They allow you to do it in a lump sum where you just pay the policy up completely and you don't have to worry about sending in any more premiums, okay? And that policy stays in force for life without any further payments. That's how it's supposed to work, okay? Now, they also have what they call a reduced paid up policy, insurance policy. If you stop paying premiums early, premiums early, the insurer reduces. Now this is the kicker. They reduce the coverage amount based on how much you've already paid. Now, the new smaller policy, it stays in force without any more payments. But this type of policy is often this type of policy is associated with like a whole life policy. And remember, I explained to you guys previously about whole life policy. These are what they call the cash value policies, where you're paying the extra money, and that extra money is going into what they call a savings account, a so-called savings. I call it a so-called savings account. Okay. Now, here's a simple example right here, just to show y'all how paid up life insurance actually works. Let's say like the fully paid up whole life policy. Let's say you buy a whole life policy and you're at age 35. And you took out a $100,000 death benefit policy, okay? And you agreed to pay them $2,000 per year for 20 years. You agreed to pay them $2,000 per year for 20 years. Now, you make all your payments from age, say, 35 to 55. 20 years, you make all of your payments. Didn't miss not one. Wasn't late on not one. Now, at the age of 55, the policy becomes fully paid up. Because that was the agreement, right? The agreement was that you have a 20-year, $100,000 death benefit policy. And so that means that from age 35, because you took it out at age 35, to age 55, after you make your last payment at age 55, then that's it. Your policy is paid up. You didn't miss no payments. You wasn't late. That's it. You got a paid up policy. That's the agreement, right? Now, the coverage, it stays in place, like I say, for life. For life. That's it. You finish with the payment. When you pass away, your beneficiary, they still gonna get the $100,000. That was the agreement. The agreement was you got a $100,000 policy. You paid on it for 20 years. And after 20 years, you don't have to pay nothing else on it. You pay $2,000 a year for it. So once the 20 years is up, or let's say you die, your beneficiary gets the $100,000, but the cash value, because remember I told you that this is treated like the whole life policy. So that means as you're making your payments every month, each month when you make your payment, they're taking part of that money and they're putting it in what they call a savings account. That's your cash value account, that so-called savings account. But see, this is the thing about this savings account. This is the thing about this savings account. This savings account, if you take any money out of this savings account that your money is going into, the so-called savings account, they treat it like it's a loan. They treat it like it's their money. They're going to loan you your money. They're going to loan you your money. That's how this policy works. You're paying, because the policy, the paid up policy is always 2 times or 3 times more than what you will pay for a term policy. Always. Whole life policies are always 2 to 3 times more than what you will pay for a term policy. And they charge you that because they make you put money away in this so-called savings account. That's how the policy was put together. You cannot get this policy without paying the extra money, so that extra money can go into that so-called savings account, which is the cash value account, okay? Now, let's say you have paid up on like I said, with the benefits, you had the $100,000, you paid it up. No, let me give this example first. Let's say you decided after you had the policy for about 10 years. After you had it for about 10 years, because remember, this is a 20-year policy. You agreed to pay $2,000 a year for 20 years. But let's say after you had the policy, say 10 years. You had it for 10 years. And you decided that you want to stop the payments. You didn't want to pay no more. That was it. Because remember, they told you you can stop anytime you want to. That's how they sell these policies. Oh, whenever you feel like you want to stop the payments on it, you can stop payment on it anytime you want to. But what they failed to tell you is, yeah, you can stop the payments anytime you want to. But that $100,000 that you agree upon as your death benefit, that's out the window. You don't just get to stop after 10 years of paying into it when it's a 20-year policy. You don't just get to stop sending payments in and think you're going to still have $100,000. It's not going to happen. Wherever you stop, let's say with this, you stopped after 10 years. It's a 20-year policy. It's a $100,000 death benefit. You stopped after 10 years, so now that $100,000 probably go down to maybe like $60,000. So now your death benefit is not $100,000. It's only $60,000. And I'm just using $60,000 as an example, but they always have charts in your policy to show you on a scale. Say if you had the policy so many years, and whatever year you decide to stop at, it'll show you how much your death benefit will be if you stop at whatever year you want to stop at. And see, this is the thing that they really don't explain to you guys. My mom had one of these type policies. One of her policies was a paid up policy. Well, she had it for my dad. It was a paid up policy. And she thought that, she took the policy out and it was maybe a $10,000 policy. So she stopped paying on it. After she had been in it for so many years, she stopped paying on it. And so when he died, here we thought we had a legitimate policy. We had, a policy. But out of all he had 4 policies. The insurance that came to us, what came to my mom, was only $3,000. It added up to about $3,000 for 4 insurance policies that they have been paying on for years and years and years and years and years. It only added up to about $4,000 for all. $3,000 for all 4 policies that he had. That's why I got into the business. After seeing all of this come to pass, I'm like, oh no, it's no way they've been paying on, because they truly, truly believed in having life insurance policies. And they didn't have just one policy, they had 3 and 4 policies. So I wanted to find out, like, what really happened? What happened here? My dad had 4 policies and we only gonna get about $3,000, really? Like, really? So that's when I kind of piqued the interest of getting into the insurance industry, because I want to find out what really happened. What did they do wrong? What went wrong? Because something went wrong. Something definitely went wrong. So I say that to say, these agents go out and they sell this policy to you, and they make you think that you can stop payment anytime you want to, and you're still going to have the same death benefit. That is not how this policy works. Wherever it would be a chart in your policy, a scale, we call it a scale, and it's going to tell you exactly how much insurance, well, what death benefit you're going to have at what year you stop doing your 20 or 30 year term. So that is the main thing that I wanted to share with you guys. Well, one of the main things. The other one is this. Okay. With the cash value, remember I told you guys that you're going to build up your savings account, the so-called savings account. They're putting that extra money aside that you're paying for the policy. They're putting it in a so-called savings account, your cash value account. And they tell you in this account you can borrow money anytime you want to. When it starts accumulating, you can borrow money anytime you need it. You know, a lot of times they tell you can use it for retirement, or you can use it to send the kids off to college and all this craziness. Okay, yeah, you can once it builds up. You can definitely do that. But what they don't tell you, you got to put that money back. They loaning you the money. The money is a loan to you. You have spent 10, 20 years putting this money in this so-called savings account that they have attached to this policy. But then when you need it, they tell you got to borrow it and you got to pay it back with interest. And if you don't, then they're going to penalize your family. So when it's time to pay your family, then what's going to happen, instead of your family getting the total death benefit, they're going to subtract whatever you took out and never paid back, plus the interest on it. And if you had taken that money out and it say been 5-10 years since you took that money out, so that interest has built up over them 5 and 10 years. So now your family will have to suffer and get whatever is left after the insurance company takes out the loan, the money you took out, your money. They're going to take that back, and plus they're going to tag on an interest to it. Yeah, they're going to tag on an interest for you not paying back your own money. Your own money. That's the kicker. It's your money. It's your money. So, with these type policies, This is the other thing that I want to explain. And I know the insurance companies are not telling you guys this when you get these policies. I know they're not telling you this. Okay. So let's say you took out the paid up life. You paid it up. Say you had a 20-year policy and you followed through. You paid it the whole 20 years. You never was late. And that's the other thing too. If you are late, that could penalize you where they don't have to follow through with the contract with the paid up part of it because you were late. Yeah. And this is the other thing that they don't tell you. This is the main thing right here. So as you put money away, and let's say you paid up for 20 years, you paid up, and now the policy is paid up. So all of the money that is in that cash value, that so-called savings account, all of that money, even though you're not sending in any more payments, that money is still accumulating interest that's sitting in that savings account, your so-called savings account, your cash value account. That money is sitting there, but it's accumulating interest on it as it's sitting there. It's accumulating. So now, even though you're not paying any more money, the money is just sitting there and it's accumulating interest. But like I said, if you need the money, you're going to have to borrow it and you're going to have to pay it back because it is a loan. This is the thing. This is the kicker. If you take all of that money out, because now, the money is just sitting there because they tell you can use it for retirement. You can use it for retirement. Okay, well, why would I want to use money that I would have to borrow from you to use it for my retirement? Because I'm going to have to pay it back. And this is the thing. If you take all of it out, guess what's going to happen? Anybody know what's going to happen if you take all the money out? Because they say you can use it for your retirement. They say you can use it for your kids' college fund. They say you can use it for an emergency, for a rainy day. They say you can use it for this purpose, right? But what if I need all of it? What if I take all of it out? It's my money, right? I put it there over the 20, 30 years. If I got a 20-year policy paid up and I paid you every dime I'm supposed to pay you. I had it for 20 years. My money is still sitting in that savings account, that cash value account. So I should be able to get that money anytime I want to. But now you're going to penalize me for taking it? You're going to tell me that I got to pay you back. If I take my own money, you're telling me I got to pay you back like it's your money. And not just that, you're telling me I got to pay interest on it. And not just that, as my money's sitting there, it's still accumulating. It's growing because it's sitting in this account and it's growing. It may not be growing as much as it would grow if you had it sitting in investment or in a mutual fund or in an annuity, but it's growing. It's accumulating. It's growing. It's constantly growing. But who is it growing for? Because if you're telling me I can't, if I get it, I got to pay you back. Or if I leave it there, guess what's going to happen? What if I don't never touch it and I die? The insurance company keeps it. So they're setting my money aside in this savings account, this cash value account, and letting it accumulate and letting it grow. But it's not for my purpose, my benefit. It's for them. It's for them. They're investing my money for them. Do that make sense? Share with me in the comments, y'all. Does that make any sense? For you to take and put your hard-earned money away for 20, 30 years, and then they treat it like it's their money if you want it. You gotta get a loan. And then if you leave it there, they're gonna take it. It makes no sense. And why would I pay you extra for a policy just so I can say in 10, 20 years, oh, my policy paid up? I could take that extra money and invest it, and in 20, 30 years, I wouldn't need an insurance policy, right? That's what we should be doing. We should take the extra money that we save, because if you go get a regular term policy, because all you want is insurance, that's it. All this extra bells and whistles stuff that they have attached to these policies, you don't need that. You don't want that. You can do your own investing. You will come out better if you do your own investing, because you can invest in stuff, because with whole life policies, with the little investment that you're going to get on that, I think it's like, what, maybe 3 to 4%, maybe 5% interest on your money that's sitting there, when you can take it and put it in a mutual fund, in an annuity, in something, stocks, in something, and get a bigger return. But see what they're not telling you, they're taking your money and they're investing your money themselves in one of these high mutual funds or stocks or bonds. They're investing your money and they're getting a bigger return from your money, but they're only paying you pennies back. They're only paying you pennies back. So why not take the money, the extra money, you just want insurance. That's all you need. Insurance, 20 years, 30 years, 35 years, you just want insurance. And the extra money, you take that extra money that you would have been paying them, putting it in this so-called savings account, and really it's really their money once you place it there, and you got to buy it if you want it. They treat it as a loan. Why not take that extra money, just invest it in a mutual fund, in an annuity, in stocks, in something, and then if you need money, you can go and get it out there. And then not just that, after 20, 30 years of you investing this money, you don't need no insurance policy after 20, 30 years, because if you have invested it in the right thing, if you have invested it properly, you would not need an insurance policy. Y'all, people who have a whole lot of money, you notice that rich people that are wealthy, they don't have insurance. They don't need insurance. Why they need insurance when they have millions put in a bank, or they got millions that they have invested? They don't need insurance policy. Insurance policy is for the purpose of, if something was to happen, you want to leave back enough money for your family to be able to still live comfortably, live the lifestyle that they lived while you was alive, and be able to put you to rest, properly, without begging. That's what insurance policies are for. Now, once you get enough money accumulated, you got $300,000, $400,000, $500,000 accumulated in a mutual fund or an annuity or stocks and bonds, you wouldn't need insurance. If you get it, it's just like icing on the cake, but you don't need it because you already have enough money set aside for your family to live comfortably if something was to happen to you. And then they can also put you to rest properly. That's what insurance is for. So that's what I wanted to explain to you guys, what paid up life insurance is. Basically, it's just the same as a whole life cash value policy. That's what it is. And remember, I told y'all before, it's only two types of insurance. You have your term and you have your cash value. Now, they have so many different names for them, but they're either a term policy or they're either a whole life policy. Whole life policies are the ones where they charge you 2 to 3 times more than a term policy, because they have so many different little things attached to it that really, when you really break it down, it's really not beneficial to you. Because why would I want to put my money away in a savings account, and then when I need it, you tell me it's a loan, I gotta borrow my own money? The devil is a liar. The devil is a liar. I'm not giving you my money, and then when I need my money, you're going to tell me I got to borrow my money? The devil is a liar. And then you telling me I got to pay it back with interest? Okay. I'm done. Y'all have any questions? Any questions? Put the questions in the comment section. I want to hear what your questions are. Yeah, y'all, I thought that, you know, a lot of people need to know that, because bottom line, just know what you got. Know what you got. I'm trying to educate you guys so you'll know when the next agent come to you and try to sell you a policy, you will know exactly what they're talking about, and it won't seem all foreign, and you won't get okie doke. You won't get okie doke, okay? So that's my purpose of getting on twice a week on Tuesday and Thursday at 5, live at 5, and sharing tips and educating you guys on what to look out for and what you probably want to walk away from, you know? I'm just sharing information, sharing educational information. That's all I'm doing. But you just have to know what you have. Even though it's called paid up, and you have the paid up option, still, there's still some things that's in that contract that you really need to know before you think you're going to get a paid up policy and you can stop payment on it anytime you want to, and you still got what you thought you had when you first took the policy out. Ain't going to happen. Not going to happen. Any questions? Any questions? Anybody on TikTok got questions? Anybody on YouTube, Facebook? Anybody? Y'all have any questions? So I'm always trying to recruit. I love what I do. I truly love what I do, y'all. And I'm always trying to get people to come on board to do what I do. And I want to train people, because the more knowledgeable you are, the more you can go out and you can help somebody else, and you can teach somebody else. And you can go and help your family members. You can go and help your co-workers. You can go and help your friends. You can go and help your church members. You can help so many people, because insurance is something that we all gonna need. Because guess what? Unless you're wealthy, if you're wealthy enough, but you got enough money put away, and y'all, you know, I hear people say all the time, well, I'm gonna just hint, check your 401ks. That's all I'm gonna say. Just check your 401ks. If you got a 401k, check your 401k. But we all gonna die one day. We all gonna eventually need life insurance one day, whether you want to think about it or not. But why would leave that burden back on your loved one? Don't leave that burden back on your loved ones, because somebody's gonna have to put you in the cloud. They're going to have to pay some kind of fees or cost or whatever and I don't care if you get cremated. Cremation these days is almost just as much as having a regular funeral. So don't think that you can get out the cheap way, because it ain't nothing cheap about cremation these days. So I say that to say, come join me. Come join me so I can teach you everything that I know, so you can go out in your community. You can go to your family members. You can go to your friends, your loved ones, and you can teach them So they'll be educated too. So they'll also be educated. Okay. Don't wait until something happens, and then think, oh, okay, well, I should have done or would have done or could have done. No, then it's too late. Should have, would have, could have, no, too late. So if y'all want to join me, please, man, please, sir, contact me, and I'll show you. And it's not hard at all. I'll put it like that. You do have to have a state license to do this. You do have to have a state license. Like I said earlier, when I first got on, I've been licensed now for about 15 years, and I love it. I'm not new to this. I'm true to this. I am true to this. I love what I do, and I would love to bring you on board and teach you everything that I know, so you can be fully equipped to go out and teach your loved ones. Also, if you want a free quote, I'm also doing that too. I would love to sit down with you guys, or just send you a free quote, because a lot of people think insurance is expensive. Now, just because you check with one company and maybe you got a high quote, that does not mean that all insurance companies are the same. Don't just get discouraged and stop and say, oh, I can't afford it, because you can afford it. You have to afford it. You're going to need it. It's a necessity. People don't treat it like it is, but it is. It's a necessity. So don't think that you can't afford it. And I promise you, with the quotes that I give to you, you probably won't find another quote like it. I mean, I hate to toot my own home, but I am too. So contact me for your free quote. I would love to give you a free quote. Don't wait until you need it to try to get it, because then it's too late. I'll put it like that. Don't wait till you need it to try to get it, because now it's too late. Okay, y'all, I want to give a shout out to all of my sponsors. I have my two sponsors, Mr. DJ Q, better known as DJ Q on the ones and twos. He caters to the young and the old. He has state-of-art equipment, and he can turn any event into a party, y'all. A party of a lifetime. He DJ for several different places. He do parties. He do y'all. Let me get my list here. He do so much, y'all. I had. Oh, wait a minute, y'all. Let me find what DJ Q, all the things that DJ Q does. He does weddings, receptions, parties, church events, corporate events, private events, brunch parties, community events, you name it, he can do. And you can book him by going on his Facebook page at DJ Q at Original, ORRIGINAL Sounds Entertainment. And also, I want to give a shout out to my second sponsor, and she has her own mobile. Did I do with the paperwork? Okay, I'm all over the place today. Y'all forgive me. But she has her own mobile bartender service. It's called Lavish Cocktails by Toya. And she does wedding receptions, private events, birthday parties, date nights, and more. And you can book her by calling 864 area code 523-2065, and that's LaToya. Or at lavishcocktailsbytoya.com. You can check out her Facebook page, Lavish Cocktails by Toya. And those are my two sponsors, y'all. So y'all hit them up. At least go to their page and check them out and see if they can be of some type of service to any of you all. Okay, y'all, that's all I have. Thank y'all for getting on. I will be back on Monday, y'all. And if y'all want to check out my chair workouts, I do chair workouts too on Monday and Wednesdays. Monday and Wednesday. Even though I have on my workout outfit today, I was not. No, I didn't do my chair workouts this morning. I did, but you can check me out on Monday and Wednesday mornings at 10 a.m. for my chair workouts. If you're interested, hit me up, and I'll be back on with my tips about life insurance. We'll be talking about life insurance, that is. I'll be back on Tuesday live at 5. Now, Tuesday, what are we talking about? I don't remember what I have scheduled for Tuesday, but I will be posting it. So on my social media accounts, so you guys can see what our discussion will be on Tuesday when we come back on, and we're going to talk about life insurance, that is. Thank y'all so much for getting on. Y'all have a wonderful, wonderful weekend, and I will see you guys on Tuesday.